Dear patrons, during the past year, there has been a surge in interest for all things digital, most notably cryptocurrency. As a man who passed on Bitcoin when it was trading at $1, no one has felt more pain watching the prices of these assets go up than yours truly. With that being said, digital assets are going to be a part of the future, and the entire market is waiting in anticipation for Coinbase's massive IPO scheduled for next month. My take is you have several companies that are currently public, and our next presenter happens to be the first and only digital asset ecosystem comprising a crypto exchange to be listed on the Nasdaq. Diginex, ticker EQUOS, is based out of Singapore and has two main areas of focus, one on the derivative side and the other on the digital security side, both in the early innings in regards to size, expansion, and opportunity. Joining us on the call today to give an overview of Diginex, it is my pleasure to welcome CEO Richard Byworth. Rich, it was a pleasure connecting with you earlier this week. Thank you for updating our community on your story and vision. The floor is now yours.
Great. Thanks, Chris. Pleasure to be here with the community again. So Diginex has a very broad aim, and that is to bring digital assets to the world. So what do we mean by that? We mean effectively taking everything from where we are today with cryptocurrencies to the next phase of growth. And that's through two main conduits that I'll go into. So Diginex, as Chris said, is the first and only full digital asset ecosystem comprising a crypto exchange to be listed on Nasdaq, but not for long. We are anticipating the listing of Coinbase on Nasdaq in early April under the ticker coin at a reported market cap of $100 billion. Coinbase is a more mature business than ours. We are at a market cap of $440 million, so 0.4% of that market cap of Coinbase, and I think for a number of reasons worth exploring a little bit further. So the two main areas that we're focused on delivering on, that is crypto derivatives and digital securities. Digital securities is a slightly longer term play. It's more about leveraging the blockchain networks to deliver securities and disrupt capital markets. Capital markets today are a $200 trillion market, so that opportunity set is massive. I'll go into how we address it today, but more of the focus is on the opportunity set here and now, and that's crypto derivatives. If we look at the crypto derivative market, volumes today are approximately 3 times the spot market. We see the current Bitcoin and crypto spot volumes at about $15 billion and other crypto derivatives around $50 billion. These are volumes per day. Now, if we adjust that to the traditional market where we see FX and interest rate derivatives somewhere around the 100 to 200 times the spot market, we can see that the area of growth that's probably likely to be the most seismic is within the derivatives space. So this is where we're focused. We have built an ecosystem that really is focused on the prime services stroke private bank model for digital assets that allows users to use their crypto as collateral for derivatives and to start to really grow that market. And I'll explain it more in a little bit more detail. Before I do, I wanted to just highlight what we've started to see in the institutional space, a massive uptick in interest over the course of 2020 on the back of what we've seen from central bank policy in response to the global pandemic. We now have 80% of institutional managers surveyed recently by Fidelity believing that digital assets are appealing, and 22% of those having already started trading derivatives. So I'm sure many of the listeners today have heard of a few of the moves in the space in last few months alone. Tesla buying Bitcoin on its balance sheet, MicroStrategy leading the way in terms of showing how to lever the debt markets into seismically increasing their Bitcoin holdings. You've had traditional asset managers from MassMutual to Tudor to Ruffer and Guggenheim all starting to take very large positions in Bitcoin. You've seen the payment processing providers move into the space, as well as the traditional banks. So we're certainly here. We're at the early stage of adoption. These are probably the biggest names that have started to get involved, but more and more we're seeing some of the largest institutions in the world start to participate in this space. So we're really at the beginning of a really quite huge shift in the way that crypto and digital securities are going to make their way into the financial services infrastructure. So just to talk a bit about Diginex and how we are capitalizing on this massive opportunity. We have our own exchange, EQUOS, that sits in the middle of our ecosystem. Each element of the ecosystem providing value and flow into that exchange. We have our own segregated custodian built by Ministry of Defense security specialists out of the UK. We are certified by Crest. We are accredited by Cyber Essentials Plus. We are the only player in the space to have that Cyber Essentials Plus accreditation for cybersecurity, and that is a Ministry of Defense designed standard for cybersecurity. Access is our own multi-venue trading platform, which allows people to plug into two of the world's largest trading technology providers, Itiviti and FIS, and actually trade crypto through their portfolio management systems, their order management systems, and their execution management systems. Itiviti is the main partner we're working with closely. They have 1,600 institutional accounts that are looking at getting access to crypto. Access allows them to trade not only on our platform, but also on Coinbase, on Kraken, and many other different exchanges. So they get the broad liquidity of the entire market while paying us fees. We also have our own capital markets business, which I mentioned is to take advantage of that hugely transformative technological moment where capital markets start to be powered by blockchain. Today, EQUOS Capital is a securitization business focused on private equity funds, and hard asset securitization. So moving all of those into digital securities. We have our own fund management business, Bletchley Park Asset Management. Bletchley Park is effectively a fund of hedge funds, which allows us to provide a portfolio approach to the very unique alpha that's available in crypto. Different types of alpha include quantitative strategies, algorithmic, long short, arbitrage across things like the grayscale premium and discount, arbitrage across exchange, arbitrage triangular across the 8,000 different cryptocurrencies that there are out there today. Just for guidance, our fund produced 35% in the last 12 months compared to your traditional alpha focused funds that are somewhere in the region of about 7.5 to 8%. We have EQUOS Investment Products, which is listing its first tracker product next month in Germany, a Bitcoin tracker fund. But this is the business that will start to fuel the options business. This is where we'll start to list structured products and issue structured products, which then fire into EQUOS and effectively provide liquidity into the listed options markets that we roll out in September. We're adding borrowing and lending to the platform, doing our first institutional trades. We did our first test trade this week. We're doing our first institutional trades in the next few weeks, and then integrating that into EQUOS itself so that people can use the platform to borrow against their assets, but also lend their assets out and receive interest on Bitcoin and on ETH and other cryptocurrencies. So that's the ecosystem, and hopefully you can see how each of the businesses accretes value towards that EQUOS exchange. And by value, I mean predominantly through flow. This is how we make our money. So these are the various different businesses and where they make money. So as you can see, the average fee base for EQUOS is around 2 to 4%. This is a much more institutional fee rate, but we actually offer it to all of the traders on the platform. It does range based on the volume that you achieve, but the average is around 2 to 4 basis points. Access, we charge an extra 2 basis points on any flow coming through that platform. The reason that people use it is obviously that multi-venue access, but also all the various different algo strategies that are built into that as well. Our fund manager is a very traditional 1.5 and 15 performance fee versus management fee structure. Our custodian has a flat rate of 40 basis points per year with 10 basis points of withdrawal fees. On the EQUOS investment products, the management fee is about 1.5%, and this is seeing already very high demand from our distributors across Germany before even launch. EQUOS Capital is very typical sort of advisory fees on typical investment banking. It can range from anywhere. We have deals ranging from 1 to 7.5% distribution fees. So this is the roadmap that we have coming in the various different areas. So Canada Q2 is where we're at now. These are the things that are rolling out. EQUO Coin actually launches in the first week of Canada Q2. I'll go into a bit of detail about that. There's some really exciting stuff happening around derivative margin, isolated margin, user-defined margin, cross-asset collateralization, and managed accounts for our asset management business. You may have been asking yourself, how does the asset management business benefit the EQUOS exchange? Well, any manager that's uninvestable from a diligence perspective and operational perspective may be investable from an investment due diligence perspective. We can invest in them through managed accounts, as can other investors using the EQUOS platform. So I'll stop with the roadmap there and move on to the EQUO Coin. We are the first Nasdaq listed company to issue our own utility token. This is focused on the various different aspects of derivatives, so cross-asset collateralization, allowing people to collateralize their derivative trades with EQUO as an asset, also providing enhanced interest. So I mentioned borrowing and lending before. If you hold EQUO against your assets and that you're lending out, then you can get increased interest through that coin as well. We also give people airdrops for other tokens that will be issued in the future from the rest of the ecosystem, as well as daily staking rewards. So the minute you earn a bit of EQUO, you end up earning on a daily basis further yields. This is a touch of what we see in the decentralized finance space of late. Is very much yield-based and daily yields and very high APYs. We also give people reduced fees on the platform for holding EQUO as well. So a really nice differentiated exchange token that is already attracting a lot of interest. We launched the awards of EQUO on March the 16th. And we saw our largest ever retail day on the platform on that day, as people started to really clamber to get on their hands on this token. So it's a really great product. It was designed by some of the smartest guys in the company, including our Chief Product Officer, Neil Shepherd, who is an aeronautical engineer by training and does a lot of the design around the derivatives for the platform and speaks extensively around crypto derivatives in the public space. We get asked a lot about how to play crypto in the market. Obviously, owning the underlying asset is one way. Owning a fund like Bletchley Park that takes advantage of the unique alpha that's available in crypto. Having listed products like beta trackers, like Grayscale, and of course, EQUOS's own investment products. And then into mining companies that are listed. So Riot and Marathon, probably two of the well-known names. But then the only real way to play in the public markets, a full picks and shovels play, is through Diginex, listed on Nasdaq, as we said, under the ticker EQUOS. And I'll stop there so we can have some questions from the community.